John, if we just start maybe with, a difficult but also very basic question is when you look at inflation, when you look at, the Reddit users, when you look at a possible falling out of cryptocurrency, what worries you the most, for May 2021?
So the number one worry for May 2021 is that we start to see the economic indicators that are most important to the Fed, like the unemployment rate, like core inflation, move in a way that could motivate the Fed to start talking about tapering in June, even though they wouldn't actually taper until maybe the turn of the year, beginning of next year. If you do see big moves down in the unemployment rate, like maybe a percentage point a month, if you see core moving meaningfully above the 2% level, then I think it's going to start to tick the boxes that the Fed needs to see ticked to entertain the notion of tapering, and we could start getting messaging around that this summer. I don't know that it's precisely going to come in the month of May, but I think as the months progress, as the expansion really gathers a lot of vigor, you're going to see that debate really kind of move to the fore of the Fed, and the bond market is not priced as if that debate is going to happen anytime soon.
But so far, if you look at earnings, I mean, they seem like a really good crop. Even the banks, apart from the slight hiccup for UBS that no one was expecting, seem to be really on solid footing.
So the earnings are fantastic. This is a usual sort of event when the economy is picking up. Not only do earnings grow at a double-digit pace, but they tend to beat even elevated expectations. So that all is very supportive, I think, of the overall narrative of equity outperformance of bonds, even if some of the reactions in single stocks on a given day are not what maybe some investors were expecting. As long as earnings growth is going to be double-digit, I think it's a very easy case to make that equities are going to be beating fixed income markets. I think the bigger question you have to ask is, why isn't the rotation happening? Why isn't value outperforming growth on a consistent basis as the numbers continue to beat expectations? I think that's mostly related to some of the influences from the fixed income market, the fact that yields are pretty soft here, and also the commodity prices outside of the metals markets, i.e. the oil price is moving sideways. But I think yields will go up. I think oil will move up. I think these fixed income influences are going to support the value rotation, and then you're going to start to see a very classic sort of improvement in asset markets. Not only do they go up, but the internals look very consistent with a strong recovery too.